Good morning, and welcome to your end-of-week global markets update. We're tracking sentiment across equities, currencies, and key economic data as the week wraps up. There's a lot to cover. From critical inflation numbers and central bank commentary to significant political and policy moves happening worldwide. Let's dive straight in. Starting with market sentiment, U.S. equity futures opened this morning on a pretty cautious note. They were initially moving sideways but started to drift back toward Thursday's lows as European trading got underway. So, the overall tone feels a bit soft. Adding to that pressure is the latest data out of China, which came in weak across the board. We saw disappointing numbers in industrial production and fixed asset investment. On top of that, new home prices recorded their fastest drop in a year, which signals that the strain in China's property sector isn't going away anytime soon. This weakness is definitely weighing on global sentiment as we head into the weekend. Now, let's turn to the US, where the big story overnight involves new trade developments. The administration has announced reciprocal trade frameworks with Argentina, Ecuador, El Salvador, and Guatemala. These deals are focused on providing tariff relief for specific goods, and notably, they'll allow more beef imports from Argentina. This is all part of a broader effort to help lower food prices for consumers. In fact, the government is also preparing widespread tariff exemptions aimed directly at easing food inflation. We might even see more trade agreements like these in the near future, potentially including Brazil. On a separate but important note, the Bureau of Labor Statistics has confirmed that the release dates for revised economic data are still pending. Even though the government shutdown has officially ended, this means some key indicators, like retail sales and the producer price index, could still face delays. Hopping over to Europe and the UK, there's been a significant political shift. The Financial Times is reporting that UK Prime Minister Keir Starmer and Chancellor Rachel Reeves have decided to drop their plans to raise income tax rates ahead of the November budget. Instead, it seems they're exploring other options to close the fiscal gap, like freezing or narrowing tax thresholds. This is a major change in their fiscal strategy. Across the rest of Europe, today's economic calendar is packed. We're expecting final October inflation numbers from both France and Spain. We'll also get the Eurozone's second estimate of third-quarter GDP, along with fresh employment and trade balance figures. It's a busy day for European data. In the Asia-Pacific region, we've seen some decisive action. South Korea has stepped up to defend its currency, promising coordinated foreign exchange support alongside its major pension fund. This is a strong signal to the markets. New Zealand markets also reacted quite strongly to their latest data. Swap rates jumped after the PMI reading returned to expansion territory, which caused the New Zealand dollar to outperform against other currencies. From Japan, we heard some interesting comments from Minister Takaichi, who pushed back against the intense focus on shareholder returns. This adds another layer to the ongoing debates about corporate governance in the country. Meanwhile, a new report from MNI indicates that Chinese investment is now at a 5-year low, reinforcing those concerns about slowing economic momentum we mentioned earlier. Let's check in with the Federal Reserve. Minneapolis Fed President Neil Kashkari stated that he did not support a rate cut back in October and remains undecided about what to do in December. We also heard from White House economic officials. Trade advisor Navarro said the administration feels it is in a strong position as it heads into a Supreme Court case regarding tariffs. Economist Kevin Hassett estimated that the recent government shutdown cost the economy about 1 to 1.5% in annualized GDP, which likely impacted around 60,000 jobs. However, Hassett also noted that the current CPI inflation readings still support the case for more rate cuts from the Fed. So, we're getting mixed signals from different corners. To wrap things up, here's a quick look at the most important events scheduled for the rest of today, Friday. The European session is filled with central bank speakers, including Escrivá, Vujicic, Cipollone, and Lane from the ECB. Later this morning, we'll get that final Eurozone GDP data. In the US and Canada session, we're watching for Canadian manufacturing and wholesale sales, and potentially the US retail sales and PPI numbers, though remember those could be delayed. We'll also hear from Fed speakers Schmidt, Logan, and Bostic throughout the afternoon and evening. Finally, after the markets close, we'll be watching for ratings decisions from S&P on Greece and Moody's on Portugal. So that's the global picture as we head into the weekend. We've got soft data from China, shifting trade dynamics in the US, key policy changes in the UK, and a very busy day of central bank speeches across Europe and North America. Thanks for watching. Be sure to subscribe for more market updates as fresh data comes in.